Hello, everyone. Welcome to this new episode of the RELEVATION Talks, where we discuss the trends in the PropTech investment space. It's my great pleasure today to welcome Conan from Sustainable Future Ventures, a new PropTech fund, which is for sure going to make a lot of noise. Welcome to the grill, Conan.
Thanks. Hi, good afternoon, Idris. Nice to be here.
We're happy to have you. And could we maybe get started with you sharing a bit of your background? How come you ended up in the PropTech space and in investing in the PropTech space? And also don't hesitate to give us a bit of taste of what are your hobbies outside of work. So what really passionates you?
Yeah, absolutely. Love to. So I'm a reformed lawyer turned entrepreneur turned venture investor, I suppose. I started out my career in M&A in London, but fairly early on, I got a taste for startups from a stint of time I did at Ocado, the online grocer, back in 2008 when it was a very different business. And this led me on a journey really via business school to Voyanta, a real estate data management platform, which I joined back in 2013 and where I was the COO responsible for business operations and sales. And back then we raised what was a small Series A from a strategic investor, Altus Group, who's the owner of Argus Software, and then ultimately sold the business to them. And looking back now, it's amazing how the European venture and PropTech markets have changed completely since then. And so I feel pretty fortunate to have been around from one of the relatively early days and see how things have changed. Anyway, we sold the business to Altus and carried on operating it as a standalone entity for another couple of years. And then ultimately we merged that business into Argus Software and created a new business unit. And so that gave me a real perspective on actually what it's like to be a technology incumbent in the industry. And from there, I then moved into corporate venture investing for Altus Group and invested in a number of the early PropTech funds, as well as a few real estate technology businesses in North America. And it was also about that time I started angel investing. And then in 2019, I launched M7 Structura with the aim of really bringing operational experience growing an early stage technology business together with technology investment and real estate experience. And ultimately SFE or Sustainable Future Ventures is the next evolution of that vision.
Yeah.
Now,
yeah, go ahead.
I was going to say, and you asked me about passions outside of work. Alas, as you may have a feeling for now, I don't have that much time. I have 3 boys aged 7, 5, and 2, and 2 dogs, all of which keep me pretty busy. But if time permits, I do love to go skiing. Though being based in the UK, I don't do anywhere near as much of it as I'd like.
Yeah, for sure. That's a geographical matter. Excellent. And I remember, the first comment from your background is really that you also have a deep experience in different kind of different source of capital, different ways of investing strategically, financially. And I remember your keynotes of last year where you were really discussing what is the best type of capital for you as a founder? Is it a strategic investing? Is it a strategic capital? Is it a financial capital or any other kind of capital? And now your journey brings you to this new venture, right? Sustainable Future Ventures. Can you explain to us how this new evolution arose, or how was it created?
Yeah, absolutely. I mean, we've been setting up SFE for about the last 6 months or so, and it's really the coming together of my vision for a real estate technology focused investor that combines operational investment and real estate expertise with Patricia's desire to leverage the work of its technology and innovation team, its investment management platform, and its real asset insights to launch an independent PropTech focused venture capital fund. And that might beg the question, because I was here last year with M7 Structura, at the move to SFE, and I first of all describe the move as sort of a hugely fortunate opportunity, which made a lot of sense for everyone involved. Ultimately, what happened is that SFE effectively acquired M7 Structura, and in so doing enabled us to evolve what we were doing with M7 Structura into SFE, and at the same time leverage Patricia's market-leading platform.
I could imagine that this transition must have been kind of intense, probably also very heavy in terms of legal, of governance, of all potentially as well tax. So a lot of I would say paperwork. But congratulations on this new launch. Now speaking of the investment. I would say team or the investment focus of SFV. Can you maybe tell us what really excites you in the PropTech space currently, and what's the scope of the fund?
Yeah, absolutely. So, we obviously we talk about sustainability. That for us means all the sustainability in its broadest form. So, environmental sustainability, economic sustainability, and social sustainability. And so, what's exciting right now, I think the applicability of environmental sustainability within construction technology is unavoidable as we think about the challenges of moving towards net zero. Equally, we're seeing the change in consumer usage, the huge rise of e-com driven by COVID, as a very challenging time for traditional retail, and also the logistics that get e-com into the home. And so that last mile logistics space and how that interacts with the built world, I think is a very interesting space. In one way, there are huge market opportunities. Yeah,
completely agree. Yeah. And speaking of the funds, can you explain to us? What are the key terms of the funds? So geographical scope, stage of maturity, maybe selection criteria.
Yeah, absolutely. I mean, we invest in revenue generating companies that have some validation of their technology. So, when we invest, we want to look at the technology as something that we believe we could roll out within Patrizia or other institutional real estate holders' portfolios and help create value that way. And for us, that means that we probably invest really at what some people describe as late seed through to Series B. So early stage, but not the earliest stage, writing checks of probably anywhere from around €500,000 to several million euros as part of those rounds. We're based in Europe, at least initially, so our focus is European because we want to generally be near the companies. We want to make sure that we're able to bring some type of value add to them, whether it's operational or introduction or connectivity. But we also have a global mandate, and so there will be instances, I'm sure, where we look beyond Europe to companies that want to move to Europe, that want to have support in Europe, and will invest in those too.
Yeah, I think Patrizia has a global presence as well, and it's great to remind that it's, of course, the largest PropTech, the largest real estate fund, the largest rate of Europe. It's really huge partner, and a key element is obviously the founder's due diligence. So can you share with us maybe what are the elements that you pay attention to when you engage with founders? Is there some personality traits that you like, or that maybe represents red flags for you? How do you assess the quality of the founding teams in a way?
So that's a great question. I think the key for me with the founding team is, I guess, openness. It's a difficult combination. You need conviction and passion and dedication, but you also need to be open to listen to others and course correct easily. And so those are sort of characteristic traits. And then we look for experience, like what gives them a competitive advantage over other founders, because it's very rare you're going to be the only company in the space doing it. So what is that founder's competitive advantage? Is it they know the industry better? Is it they're stronger technically? What is it that positions them? And obviously the relevance of it depends on the nature of the company.
Crystal clear. Thank you very much. And now maybe a more commercial question, and which is actually the other way around. So why should founders select you as investor?
Yeah, probably a more important question for the founders out there. I think there's two reasons why founders might want to select us. And the first is team related, the second is organizational. As a team, we bring entrepreneurial understanding and operational experience. And I think that is something that not every investor can say. I've been in a situation where I've not paid my salary for 2 months because we'd almost run out of money and we're waiting for the funding round to close. So I know exactly how that feels. And I think, sometimes that can be challenging if you've had a more traditional career path and gone through finance straight into investment. It's just not an experience you've had. And then the second is organizational, which is, as an organization, we strive to combine the best of financial and corporate venture capital, by which I mean, we make decisions quickly, we invest for financial return, but we're also able to leverage Patricia's platform and that of its other LPs for strategic insights and for the potential for value creation in the way that a more traditional strategic or corporate venture investor might do. So for me, it's a combination of team and organization that differentiates us.
Yeah, clear. Thank you. I remember actually the first time we met, it was in a Super Ventures in Berlin. I think the last event that I attended physically before the beginning of pandemic.
Me too.
Would you have any anecdotes that you could share with us on how you maybe help portfolio companies? It can be as well companies where you invested as a business angel to help them overcome problems, issues, or challenges that they were facing.
Okay, I think there's a couple of different ways in which you can do it, which I have done it. The first is more as if you have a company that's in one particular country and is trying to expand itself geographically, it's to be able to support the founder as they expand internationally. So for instance, we've recently involved in investment into a Finnish business. They're expanding into the UK and into Germany, and really trying to support them as they grow internationally and as they expand their sales function. And that's something that I have direct experience of myself at Voyanza when we try to sell into Europe and sell into North America from the UK. And then I guess the second type is just being there to talk things through with founders from sometimes a more entrepreneurial perspective. Whether it is the fact that they're not happy with the level of dilution they receive and whether that's reasonable or not, through to actually just being able to bounce off the fact that it's really stressful launching and growing a business, and having someone that's willing to talk through some of those stresses with them. So much less specific point, but more just being a sounding board.
Understood. Thank you. So I would like maybe to understand a bit more your views on this dimension of ESG related, because of course, with the name of the fund, you already explained a bit the different angles of sustainability that you have. And we have the feeling here that sustainability becomes really a huge topic for all the PropTech VCs, actually, this very small ecosystem, and everyone speaks about that. So do you think, maybe a blunt question, but do you think impact investing is actually the future of PropTech investing?
No, so I don't equate what we do with Sustainable Future Ventures with impact investing. I mean, particularly within the space that we operate, if we, and as I said, we talk about sustainability and we look at environmental sustainability, which I think everyone sort of is generally clear on, but people tend to be less clear on social sustainability and economic sustainability. But if we look at the built environment or the real asset value chain, and we think about the processes that take place, whether it's during the building stage, transactional stage, or the operation stage, I think almost anything that you do that improves resource usage, the efficiency of the process, improves sustainability, or just improves the way people interact with buildings, has positive impacts from a social sustainability standpoint. And so it's more that I think it's when I look at the sector in which we're investing and we look at the huge potential for technology to have a positive impact on it, I see that really layering in wanting to have a positive impact from a sustainability standpoint really doesn't change what you invest in particularly. You add an additional layer through which you view those companies to ensure that there is a positive sustainability impact from them. But ultimately, my view is the best investments will be the ones that enable a sustainable future. Because ultimately, if we think about sustainability, at the bottom of it, it's creating, enduring value. And so it's very different, I think, from where you have an impact focus and that is the driving reason d'etre behind a fund. Whereas for us, it is just one lens that we bring to bear on the investment process. And probably worth noting as well that, we're reflective in our name. It's not just that we pulled it out of thin air with the mission of Patricia, which is to build sustainable communities and futures. And so for us, I felt it was a very nice coming together of our personal team interests to invest sustainably with the interest of Patrizia.
Great, love it. And so I think the LinkedIn and the website was launched very recently. So really go and follow that. But I don't think that I know you, and I'm sure that you have a well-established vision for the future. So could you maybe walk us through your 5 years company vision for sustainable future ventures?
Wow, okay, big questions. But first of all, yes, you heard about Sustainable Future Ventures first here at Relevation. No,
Yes.
No doubt about it, and very much we sort of come out of hiding to start talking a little bit about ourselves here. In terms of a 5-year plan, look, we want to build ourselves out to be a leading value add technology investor in Europe, focused on the built environment. So we're currently about to start raising our first fund from LPs within the Patrizia network, but that will be the first of what we hope to be a fund series, and all very much built around leveraging diversity of team experience across investment, operations, and real estate, with leveraging organizational advantage, whether it comes from Patrizia's infrastructure or those of other LPs.
Crystal clear. Thank you. Maybe now more of a personal question, if you allow me. If you look back to your career and all the adventures that you had, all the different hats you had, from the entrepreneurs, more the corporate VC, all of that, what was the most difficult time that you faced, or the most challenging time, or maybe the most fulfilling achievement? Because I think it's also often really related, of course, that you had so far.
So I think probably my biggest low and then high would have been actually when we were raising capital for Voyanta back in 2013, 2014. And I already alluded to the fact I ended up going a couple of months without paying myself salary, and the CEO didn't get salary either. And that was probably the most stressful, which I'm sure is an experience that many founders listening to will have had, which is, the investment round is taking longer than anyone wanted it to. It's getting drawn out, and from an investor standpoint, it's vaguely frustrating, but from a founder standpoint, it potentially has very, very serious consequences. And I remember that being dragged out, and there being an issue that arose at the last minute that effectively involved me jumping on a plane and going to Canada to try and resolve. And then the high of actually getting everything squared away, securing the financial stability of the business, and being able to take it forward with a value add investor would have been sort of the resultant high that came from that. And with everything in life, it's the variation that makes the moment.
When was that? Was it more than 7 years ago?
So that would have been, so 2013, 2014, when, as I said earlier, like the market for raising early stage venture capital in Europe in the prop tech space was, completely different. I mean, prop tech wasn't even really a word back then. And, when we went out to the market, and we had quite a mature product with, large institutional clients at the time that we went out, and still, we had maybe a couple of term sheets to choose from at the end of the process. And in the end, we chose strategic because we saw the value add that came with it.
So clear. And if I'm correct on the math here, it means that you were not a dad yet, because you're older as 7 years old. So at least you didn't have to combine these issues with the parenthood.
Actually, I was just, and my wife doesn't let me forget about it. So I think my son had been born in December, and I was jumping on a plane in February.
Wow. Okay, get it. Okay, super challenging times. Okay, great. And now maybe the biggest lessons learned as entrepreneur, as a professional in general, or maybe the most important single advice you could share.
I think sometimes it's just about staying in the game and keeping your head down and pushing on. Like, if you run out of money and the business fails, you've got no chance of the future. But if you can keep on going, you never know what comes. And I often find, and it's been the same whether I was, in a professional services context, or as an entrepreneur, or as an investor, good and bad news tends to come in threes. Like I'll often have a day in three, pretty painful things happen. It's still the same now. And, you just keep your head down and you push through. And then the next day, things tend to look better, or the next week, things tend to look better. So I think it's, for an entrepreneur especially, it's about staying in the game, working out a way to get through to the next stage. And perhaps without always trying to live up to every piece of perfection that you want. Don't let perfect get in the way of good. And sometimes getting a transaction done quickly and moving on is worth far more than it taking an extra 6 months and it being the perfect transaction. Because the reality is, what was perfect after 6 months already would have been different from what it was when you started out on the journey.
Absolutely. Yeah. Resilience always pay off. I do agree. All right. And maybe now the only commercial question for ourselves, Relevation. You decided to become a gold sponsor of Relevation this year. And can you tell me why you decided that? What's the value add that was exciting to you?
Yeah, absolutely. I mean, we took part last year with a different hat on, and it was a really positive experience. And I think you've done a great job in building an ecosystem of entrepreneurs and investors with a European focus on it. And for us, being a new investor coming out in the European market, but also with international reach, it felt like the natural place for us really to come out as a brand and begin to talk about ourselves in the market.
Couldn't agree more, and we are honored to have you on board, of course. And all the founders are out there, but as well LPs and as well maybe other VCs who wants to co-invest together with you will be able to meet you during these 2 days event. So looking forward to it. Thank you very much for your insights, for your transparency. Very appreciated. And speak very soon, my friend.
Absolutely. Good to speak with you. All the best.